Markets in Asia and Europe ended on a higher note this week as they expected positive outcome from US-China trade talks. But US markets went down as it came to attention that Chinese convoy visited US for trade talk has cut their visit short and they are not going to visit the agricultural areas they were supposed to visit. So due to this, there was a fall of 157 points on Dow. However, Indian markets were in jubilant mode after reduction of corporate tax. A wave of positivity and happiness was spread across the markets and Sensex gained more than 1900 points, which is the biggest gain in more than a decade. Now, this week, markets were bound by the news of oil crisis that emerged after there was attack on Saudi oil field. Soon after that, Yemen took responsibility of it, but US kept charging Iran to be behind the attack. It also led to increase in geopolitical tension and shortage of supply. It seemed that after attack, there will be loss of 5.7 million barrels of oil, and that led to short term prices of oil, which in turn had impact on whole market. Share markets across the went down, and specifically that stocks of shipping, airlines and automobiles, as for them oil is the main input cost. So increase in oil prices will increase the cost of production for airlines, shipping and automobiles, and due to that their profit can be reduced. So this was the reason why those stocks were in decline. But that overall changed the mood of market, and for few days markets were actually down. But energy prices however gained and energy stocks were soaring high. Then it was reported that supply will be compensated by using reserves from Saudi, but there is still a problem of spare capacity that persisted because the spare capacity of 12 million barrels per day of Saudi will return only by November. So till that time, if there is any shock to oil supply, it will be very difficult to compensate. Also, at political tensions surrounding it, Trump said he was locked and ready, and Iran continuously denied the involvement while evidence support the contrary. However, previously it's seen that US will be less likely to use military action as it's aiming to cripple the economy of Iran by imposing more sanctions. But then we got to know that at one point Saudi has already launched attack on Yemen as Houthi rebels of Yemen took responsibility for attack, and things took another turn when it was reported on Friday that US will send more troops in Middle East, hence increasing the tension. Now this deployment is said to be of defensive nature and an offensive one, but given the current situation and tension between Iran and US, things can anytime go out of hand and can escalate very quickly. So at one point we have political tensions, at other point we have supply concerns. Now in this scenario, if there is any shock to oil supply or any attack, it will be very difficult for compensating that, and that was the main reason why oil prices are getting boost, because the supply is already limited for the amount of compensatory demand as there is no spare capacity, and any further shock to oil supply can even lead to more shortage of supplies. And due to that, we saw that Brent gained more than 7% on weekly basis, while WTI gained more than 6% on a weekly basis. And after that, market moved towards another major event of the week, which was none other than Fed meeting. Although market got what it expected, the rate cut of 25 basis points, but it was not happy as there was no clear signal of future rate cuts. While markets want more aggressive rate cuts, this will create problem as interest rates are already down, and still there is no uncertainty in the market that demand will revive, as it needs to be paid attention that besides low interest rates, investors also look for return on future and future expectations. And what about the future expectations right now? Well, we all know it's not at all positive and it's gloomy. So even after these stimulus programs, there may not be necessarily a revival of economy, and that's why it's important that we need to focus on increasing the production potential by focusing on productivity and long-term investment rather than going for short-term solutions like stimulus. Still, at first markets were unhappy, but then they moved on and took it in a positive rate way as the rate cuts were there. Bank of England and Bank of Japan has kept the rates unchanged, but they also said the attention needs to be paid on slowing economy. Bank of England added that Brexit is creating a lot of uncertainty in the market, and that will have a huge impact on economy. If there is no deal Brexit, that will definitely be very catastrophic for the UK. But if in case there is delay in Brexit, That is also creating uncertainty, and market doesn't like uncertainty, neither does economy. So that is also going against the stability of Britain, and which is again impacting the economy. So Bank of England has said they will take action accordingly, looking whether there is foreign inflation or a bigger foreign pound. If there is a foreign inflation, then rates will be reduced to bring up the inflation and revive the economy. But in case there is foreign pound, so increase more money from outsiders, the rates will be increased. As after higher rates, more people will be attracted towards the Britain for depositing their money, and that can revive the pound if in case pound fell after the Brexit. And after all this, market focus on another main event which is considered to be the major factor behind global economic slowdown, and that is US-China trade war. It was expected that after goodwill gestures last week, that there will be revival in talks and maybe we can see something positive out of it. But even before the start of meeting, there were heated words, as close aide of Trump said in an interview that if there is no deal on soon, then US can impose much more tariff on China, and right now it has imposed very less amount of tariffs. And China also gave the message that its goodwill should not be considered as weakness, and it is not that anxious for the deal. After this, markets were still hoping that there will be some positive outcome from the trade talks that was happening between US and China, but then went other way around, as Chinese officials cut their meeting short, and that gave the signal there will be no deal soon. This happened after the Asian and European market closed, but American market was still impacted by this, and Dow closed with more than 100 points down. Brexit is also creating a lot of uncertainty, and even UK general political environment, because there was a case which to decide whether the suspension of parliament by Boris Johnson was lawful or not, and on that decision will be taken by next week. 11 judges are looking after that, and they are expected to give the verdict very soon. So if the verdict come out to be positive, that may help the economy, but right now the uncertainty is looming very high. Indian markets were in jubilant mood, as finance minister gave them the corporate tax cut reduction, which is considered to be one of the huge thing for economy, and it also helped rupee, as rupee closed below 71 at 70.94 against dollar, as announcement by Sitaraman lifted the mood in the market. Corporate tax are reduced 22%, and after including cess and surcharge, the effective tax rate will now be 25.17%, and this tax rate will only be applicable if companies do not avail any other incentives, while MAT is also reduced from 18.15%, and after the reduction in tax, there is said to be 1.45 lakh crore of revenue will be foregone by the government, and that will be there in the economy with the corporates. Now this may attract investment from China, as the trade war is already putting them out of that place, but for that it is being said you also need to focus on other reforms like labor reforms, land acquisition. These are also the problem which is impacting the investments and foreign investment. So if you want to improve that, so according to experts, all these things also need to be taken in account. But yesterday markets were enjoying it and celebrating it, as they felt that the government is trying everything to improve the condition of economy. So moreover, this move was quite unexpected. An unexpected positive mood gave a huge boost, as Sensex closed above 38,000 at 38,014.62 with a gain of 1921 points, while Nifty also closed with a gain of 569 points and closed above 11,200 at 11,274. Bank Nifty stole the show, as it gained by 2,223 points and closed at 289.15 for the week, and all stocks were positive. Now if we talk about gold, gold was trading at 15.24.4 ounce on this week, and it gained 1.64%, while silver also rose by 18.05 ounce, giving more than 2.57% on weekly gains. Now, one, there is political tensions. Second, economy is slowing down. Third, low interest rates are reducing the cost of opportunity cost of gold, as opportunity cost means what you have to forgive for buying the gold, and right now the things you have to forgive are basically bonds. So if interest rate on bond falls, yield on bond falls, then definitely the opportunity cost of gold falls, and therefore its value rises. Beside this, there is also a huge amount, around $17 trillion of bonds that are giving negative yield. So all these three factors combined are giving a positive boost to the gold prices. Bureau Report, Market Times TV.
आपको अगर हमारा वीडियो पसंद आया है तो इसे लाइक करें, साथ ही यूट्यूब चैनल को सब्सक्राइब कीजिए और मोर अपडेट्स जानने के लिए बेल आइकन को दबाना न भूलें।